Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on, Rose. Hope everyone's having a great day, safe day. Let's make it a great 2015, folks. You gotta love it. Yesterday's gone. Tomorrow's not here. What are you doing right now? This is a quote by Chuck Knox. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We have the Dow Industrials flat, NASDAQ down 16, S&P's a flat. Gold contract. You're going to love this, folks. You talk about wide price spread in gold out here today. We have it all. Gold contract is flat at 1184. What we had happen in this gold market out here today with the dollar, by the way, at monster highs, is that you had a low of 1167, a high of 1194. You rejected lower price. You did it with lighter volume. Bottom line, gold is on its way up to this 1256 area. Oil down 68 cents, trading out at 52.59. Oil is toast, folks. This is going to be wild watching this whole baby shake out. What we have with oil is this. Price spread today in oil, $55.11, down to $52.03. What you did is that you had 244,000 contracts traded. Try to get up into the higher range, even though there's really not a higher range, but it's been in the same range since December 16th. The top of that range was 55 to 59. You got to 55, gave it up. You're going to close out at the lows. Oil's going to crack $50. Oil's going to basically run into the low of 2008. Now that low there, this is going to be shocking, okay, but the bottom line, folks, that low that it's going to go after and test is 32.40. That's where this baby is heading, and it's pretty intense because, see, the top of that bar is $54.62. We're at $52.56 right now. Bottom line, you get into it. At $50, you know, it will have a shot, okay? But I expect that, you know, we're going to barrel right into that baby. The next place that, once it goes under $50.47, there's zero hope for it. You'll be down to that $32 level in about a heartbeat. Now, let's go over to gasoline. You know, the price of barrel of oil, of course, affects each and every one of us. Gasoline, even more so. Gasoline, folks, right now is down 3 pennies today. You're at 143. Gasoline is on its way. This is pretty intense. Now, check this out. This is pretty cool. You got 206. You got 50 cents. Yeah, gasoline's down to a buck, about 13 to about $1.20. That's going to put unleaded gas at the pump under $2 right across the country. You know, bottom line, you get about another 20 cents. So you can figure, no matter where you are in the country right now, take off about another 20 cents, and I suspect that's going to take, it's not going to take long. When you have ABC structures, folks, the A to B is a straight line move, and the C to D is a straight line move. That's where we are inside the oil market right now and inside the gasoline market. Bonds. Where are we with bonds? Guess what, folks? Bonds are doing an ABC structure on the way up. If we take a look at the 10-year first, what you have with the 10-year, it's moving with wide price spread, accelerated volume today, all of the above. We are at 127.06 on the 10-year. We've done 714,000 contracts. You're inside the October 15th bar. The high of the 15th is 129.28. That's where this baby's going. And that's going to, it's a shocker? Yeah, it's a shocker. Let me tell you something. Rates are going lower. We're at 2.1 on the 10-year right now, and if we go, the 30-year is really a mind blower. The 30-year is bringing everything up, by the way. 30-year bond is at 2.6. That's a mind blower. Just think of something. You're lending money at 2.6. 30-year. We go take a look at the 30-year bond. This is what you have with the 30-year. 30-year bond, 235,000 contracts today, and the 30-year had already tested the October 15th high. The first time we get up there was 146.16. We've hit 145.50 30 today. I suspect more than likely next week, whatever's going to happen next week, folks, it's not going to be cool if you're long this market, meaning you're long the S&Ps. Because this bond market is screaming that it's going to blow away 146.19. And in that texture, what you have is that you have an 8-point ABC structure up, and that's saying that the 30-year bond's going to run to 150. So that is, needless to say, huge number. That brings down the rates dramatically, brings up the price dramatically, and if we bring this out in a continuous contract, what you're going to see is that the high that was established in 2005 is 153. You know, so that what that puts in play now is that 153 will be hit. Bottom line, you can actually, I can make a case that this is an ABC structure on the way up. And if I won't make that case today, I've made it a few times, but I will more than likely make that case next week, and I'll give you the parameters inside that. But it looks to me like bonds are doing a much larger ABC structure to the moon. Now, King Dollar. This is about as cool as you get. So check this out, folks. King Dollar today is screaming. I mean screaming higher. Yet, gold, the gold equities, they can't smoke them. What does that say? That says, folks, that King Dollar is going to be topping out. DXH5. Move today, sweet move. 758 ticks. We're at 91.40. If we look at this continuous contract, what you have with the continuous contract, it's trying to hit, and I expect we are going to get that hit, is the 2005 high, and that high is 92.53. Today we've hit 91.41. And as I said in the morning show, this morning I did the Nadex Bull and Bear binary option hour at 10 o'clock, 10 to 11 Eastern Standard Time. It's almost too easy that it's just going to get hit there. More than likely you're going to see that spike it. But that spike, what a spike specifically is it'll blow by it, who knows, blows by it by 100, 200 ticks, and then gives it up on price. Why am I saying that? Well, what you can see clearly is that the gold contract itself, they can't hit down. Gold wants to go higher. The XAU, the HUI, higher price. The XAU right now is up 118. We're at 69.96. The HUI, take a look at the HUI. HUI is up 254. You're at 166. And the individual equities, you're going to start breaking these equities down, you're going to see monster strength. An Eco Eagle, now we happen to own an Eco Eagle, that's up a $1.84. It's at 26.74. It's taken out its swing point. One swing point, it has 5.1 million. You've done 3 so far. The highest swing point has 2.9 million. This is moving with force, folks, big time. So what you have with an Eco Eagle, let's see, we're 26.77. Yeah, we got real action out here. Rheingold Resource. Well, actually, look at FNV. This is Franco-Nevada. Franco-Nevada, not much action out here. That's a sideways move, $48.86. Franco-Nevada is going to need more juice behind it. Rheingold Resources, GOLD. That has some action out here today. Rheingold, 638,000 shares. That's going into 1.1 million. Bottom line is that you have a cause out here, you have effect out here, and I suspect what we're going to see much higher prices. And when I say much higher prices, I mean very quickly, folks. We go over to the silver contract. We look at silver. Excuse me, folks. Silver is flat in the market out here. $15.71. Silver is going to need more juice also. Whatever is laying out here for next week. Well, here, let's do the S&Ps. The S&Ps out here, folks, this is a monster failure. Well, first, I'll start with the small caps. Small caps, all the indices, nice failure in a huge way, too. IWM had topped out, folks, on the 29th. Did it with 27 million shares. On Christmas Eve, New Year's Eve, you come down with 35 million. You get 32 million today. You're inside the lower range. That sets up the IWM to run down to 113. And what you want to remember, your benchmark out there is 103, the October 15th swing low. That's going to get hit. We take a look at the, that's IWM. So we take a look at the SPY. What we have with the SPY is this. SPY is at $204.91. It had made a high out here with 79 million shares. It comes off that high with 130 million. It's doing 90 million now. Bottom line, SPY is on its way to 181 and you're at 204. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. If you would like to test drive the gold report, folks, and our market insights, you can go to TFNN, go to newsletters. You'll see them right under either trading newsletters or investment newsletters. Coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 30. You get NASDAQ off 17. S&Ps are off 5.5. And, folks, if you'd like to test drive Market Insights to my daily newsletter, you can do that by coming over to our website at TFNN, going to newsletters, going to trading newsletters. You can test drive that Market Insights 2 weeks absolutely free. If you'd like to test drive the gold report, Go to TFNN, newsletters, investments newsletters. You can test drive that for 1 month. You can test drive both of them if you'd like. When we talk let's go into the 3 Qs, NDX 100. So what do we have with the NDX 100? NDX 100 is at 102.86. The NDX 100 didn't get to its last high. The high in the 3 Qs was generated on the 28th of November. That high was 106.24, and we did that high with 17 million shares. The NDX goes from 106 down to 99. You come back, you try to get up higher. You did 17 million shares again, and what ended up happening, that was on the 29th. You come off that high, and you do 24 million shares. We've done 25 thus far. The 3 Qs, folks, want to also run down to 90.24. It's a big number. It's 10% from where we are right now. That is the October 15th level. The October 15th level is the first benchmark that these indices want to go to. And, you know, the way that we came off the highs on New Year's Eve, the New Year's Eve, that was pretty intense. You're going to see a lot more of that come Friday. And where I'm going with all of this really has to do with the bond market and the dollar. They're both screaming. The bond market in particular, folks, is screaming that there's something that's laying out there that money wants to get safe in an extraordinary way. That's what that bond market is screaming about. The S&P itself has been laying up at these highs for quite a while with absolutely zero volume. The way that many of the indices have come down, they've confirmed that there's more force on the way down than there is on the way up. The king dollar is the wild one on this whole deal, because normally with a dollar trading up 773 ticks at 91.42, the commodity markets should be, the gold market in particular, should be getting smoked beyond belief, when in fact gold is up versus down. You know, so that is saying quite a bit. And more than likely, what I expect you're going to see there is that the spike's going to come in the dollar. It's going to back down. Bigger, I suspect, what probably we're going to hear in the next 2 or 3 weeks, because these currency moves have been so dramatic. There's going to be a blow-up somewhere because of the currency moves themselves. And that blow-up can be whether it's a large sovereign fund, whether it's the foundation. It's going to be something out here. Large, fast currency moves, okay, put dislocations in the marketplace. Never mind the dislocation in the oil market. You have the euro has just gone from 136 to 120. You know, bottom line, that is one monster move. The oil and the oil service stocks, okay, let's go to the XLE for a second. So if we take a look at the XLE right now is at 79. The XLE laid out a high. That high was laid out in June at 101. So the bottom line, you're down 25%. Is that going to stop? I don't think so, because what you have on a weekly basis is you come off that high. On a weekly basis, you made a high with 56 million shares. You come off the high with 270 million. You do a counter trend bounce with 92 million, and you come back down with 266. Bottom line, what you have here, you get a indice that is a monster in the context of what markets want to do. You're already back inside the 80 price point from 2011. So what does that set up? That sets up that, you know, this thing's going to run down to like 49. That's going to be a 50% haircut. Now, in that scenario, yeah, let me pull this back. Actually, that's on the weekly. I'm going to put this on a 10-year monthly. So on the 10-year monthly, the way it's set up is that your first stop on the way down is going to be 63. And if you get into 63 and it has volume, guess what? As oil is going to the 2008 lows, that's saying that these oil service stocks can go to 2008 lows. What does that set up? Well, what that sets up is this. Every fundamentalist that you hear out here for 2015 that is saying the way that a fundamentalist sets up the marketplace is that, and listen, you know, fundamentalist and technical, okay, just to get something clear. This is the differences in both of those setups. On a technical analysis, we're looking as to what has happened with the marketplace. We're looking for a supply and demand equation. That's what we're looking for. So we're looking backwards for that, right? That's the bottom line. That's what we're looking for. We're looking for where's the money going in and out. A fundamentalist is looking for what price earnings are, what the accelerated growth can be, and they're believing what a company can say. So in both cases, you have subjectivity that is all over the place, okay? Just to clarify both trains of disciplines. Now, this is where it gets great, though, because what happens with either one of them, you know, you can take them apart. On a fundamental analysis, you can take the aspect that analysts are saying that when they say an S&P should be up so many points, like the people are looking for, you know, the market to go up, whether 7%, 10%, 15% this year. They take the number of earnings on the S&P, and then they put a multiplier on it. Right now, the multiplier is, you know, about 15. Okay? Well, if you do that, the number of analysts that I've heard out here thus far absolutely have not taken into consideration that what the large integrated oil companies are doing and how much they're going to make. Because what you have inside that S&P, you have the Exxon Mobils of the world, the Chevrons, the Schlumbergers, the Oxy, the ConocoPhillips, the Apache, the Devron, the Rig, the Halliburton. Guess what, folks? They're not even coming close. We'll see whether they make any money. Okay, because that's how fast and furious the oil market has come down. So this is going to be a highly volatile year that we're coming into. I suspect next week is going to be a highly volatile week, in a big way, not in a small way either. You know, because the way that the gold equities are running, the way that gold refuses to go lower, the way the bonds are going higher, the way that the king dollar just wants to go higher, but guess what? It looks like it's going to get shut down. We take a look at some of the high volume stocks in this market right here today. You get Apple down $1.40. Apple's going a lot lower. You get Facebook flat. Halliburton is up 41 cents. Big Blue, IBM, that was up $1.50 earlier today. You're up $1.40 right now. This is going to be a monster failure. 141.69. Big Blue is down from $210, and what you're going to be seeing, Big Blue is on the way down to 116, and you're at 161. This is going to be once Big Blue, folks, Big Blue broke down in an extraordinary way the week of, the month of October. We went from 190 to 161, huge volume. Did 146 million, blowing all the swing points away. You're blowing 131 away at 72. What that does is that just brings it down to the next level, and the top of the next level is 130. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are down 25. You get the NASDAQ off 16. S&Ps are off 4. Gold's up 220. Silver's up 13 cents. Bonds. The super bonds market. The 10 years up 13 ticks. The 30 years up 1.2 ticks. King dollar up 778 ticks. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Don't forget, at TFNN, we broadcast 10 hours of live content every trading day. You can get all of that content right on your cell phone, folks. Right in your browser, you just put tfnn.mobi. If you'd like to get Tiger TV, go to tfnn.com. On the right-hand side, you're going to see the TV going. Just hit that TV. You get the audio, video, all the charts, all of the above. Market right now, you get the Dow down 21, NASDAQ off 15, S&Ps are off 5. The Dow Industrials, inside the Dow Industrials today, you had a high that was generated out there of 17,951. You're down basically $1.50 off of that. Market couldn't handle the highs out here. Inside the Dow, which is putting juice into the Dow, you have Marbell. Marbell is the leader in the Dow. That's up 31 cents. Big Blue is second at 144. Merck is up 36 cents, and Visa is up 165. Taking it out, you have Home Depot down 163. Nike is down 139. Procter & Gamble is off 91 cents, and GE is down 26 cents. We look at the NASDAQ composite. Inside the composite out here, what you have is that that's down $16. You're at $16.80. The composite, has a gap also. The gap in the composite is 46.51. We'll see that, I suspect, this Monday morning. Now, let's go over to the IBB. The IBB, folks, is the NASDAQ Biotech Index. This is up $2.15 right now, 305.50. Inside this composite, inside this indice, rather, your largest weighting structure is Biogen. Biogen makes up 8.7% of it. Celgene, 7.8. Amgen, 7.6. Gilead, 7.4 rather. Regeneron is 6.5. Vertex 4. Illumina is 3.8. If we start and just look at the whole structure first, what you're going to see inside the structure is this. We are at 305.76. This had made a high on the 19th of December at 319. It does it with 2 million shares. It blows off that high and comes down with 3.6 million. Tries to come back and get up into that high on New Year's Eve, and it gets to 309 and then closes at 303. Bottom line, can't handle the higher price. It tested the downdraft that was out there on the 23rd. What this sets up, number one, it sets up 292. You're at 305. Larger DLO is the October 15th swing low of 247. As you start bisecting and dissecting a few of these inside the indice, if we start with Biogen, what you're going to see is that exact same setup. They're just selling these babies. Biogen is up $2 today. You're at 341. Biogen, try to get into the December 23rd level. We did that on New Year's Eve. We did it with 860,000 shares versus 2.6 million. Big problems, folks. Big problems. We look at Celgene, CELG. What do you have with Celgene? Same type of setup. Pretty amazing, actually. Celgene got over the downdraft of 113.11. Did it with lighter volume, got to 114.57 today. Celgene's going to be a heads up in a big way, because the close today, I expect you're going to see a close under that 113.11. And that's, you need about another 10 cents down from where it is. The Gilead, okay, this equity's got big problems. This equity is trading at 95. Now that's off the high already of 112, 116 actually. 116, when it made the high, it got over the swing point, had lighter volume. Now it comes off that swing with big volume. Then, however, it gaps away. That is always an indication that the stock's going to have real problems. When I say gaps away, this gap down. So we've gone from 116, we're at 94 right now. You have a high volume swing low at 85. We bring this back, and this looks to me like it's a monster ABC structure on the way down. And this is an equity that, is screaming that it also wants to go into the April swing low, which is 63. So, this is broken its uptrend. It was an amazing uptrend. There's no doubt about it. If we bring this back on a monthly basis, what you're going to see with these biotechs in general, that was amazing. And Gilead's case, it was just almost parabolic, actually. Gilead was trading at $17 in November of 2011 and gets all the way up to 116. That's like what a gold stock does. That's called a 10-bagger, folks. You don't see a lot of other equities do 10-baggers. There's enough of them, but you don't get them a lot. Bottom line, we're at 94, 78.60. Now, 78.60, we'll see if it can hold that. It very well could, because what you had at 78.60, that was the high of the downdraft in April. The low is 65, but that's big volume there. So how we come into that area is going to say quite a bit. If you come in with big volume, though, that's saying, guess what? You're going south in a big way. Banks. We want to go over to the banks. Banks haven't croaked yet. What you have with the banks is this. The XLF, also, you know, the indice itself has made a high, had lighter volume, come off that with volume. The XLF right now, we're at 2470. That looks like it's going to get down to 21. We go over to Berkshire Hathaway. BRK is the largest weighting structure inside the XLF. And what we had with Berkshire Hathaway is that the first high that was generated out there was December 8th. 5.3 million shares at 152. Then we come down, but we only come down with 4 million. It's like, hey, that wants to go higher. You go topside, you hit 152 at 7 million, and thus far, you just have a consolidation here. So Berkshire Hathaway itself will need heavier volume on the way down, lighter volume on the test in order to basically confirm that it wants to go lower. I mean, it's screaming that the October 15th level is still out here. But up at these levels, it's holding pretty good. JP Morgan Chase, that's the second largest weighting inside the XLF. JP Morgan Chase, same kind of setup, really. Now, JP Morgan has a high volume low at 54 to 62. However, what you have to do is that you have to get by the last couple weeks of trade, last week and a half of trading. So inside that texture, when I look at the XLF, which is cool, watch how this could shake out. Just as we got a pop the market this morning, the Dow is up $1.24 this morning, okay, immediately. What you'll probably see is that the first full week of trading is going to be next Monday. What you're probably going to see here is also you'll get a pop. That pop won't hold again, but the XLF, what the XLF will manage to do is it'll manage to get into the highs once again because we're at 2474. 2514 is the high. It'll get into it. It'll have lighter volume. That's where the failure will come because then what you'd have, you already have the XLE wants to go lower. The IBB wants to go lower. The XLF hasn't cracked yet, okay? Banks seem to crack the last on very large downdrafts, and I don't expect anything different this time. Russell 2000 is cracked in an incredible way, actually. The Russell 2000, the actual indices at 1197, and this index has been trying to take out its high going all the way back from March of 2013. Just couldn't handle it. That the high there was 1212, and we got to 1221. We closed at 1197. The bottom line is that it just didn't handle it. It has a high volume swing low at 1040. Right now at 1197. That's game. Now check this out because first off, if we get down to 1040, which I expect we're going to, that's the October 15th low. You break that low, though, ASA, you break that low, what that sets up, man, that sets up something that's vicious. That in the small caps. That sets up a 832. And so that's approximately 35% down off of where the Russell would have made a high all of 3 weeks ago. Apple, let's go over to Apple. The whole world is saying that I guess we're going to be wearing the Apple Watch. I doubt it. Bottom line, Apple right now is at 109.23. That's a consolidation. I suspect on Monday morning you're going to get a little pop on Apple. It can go up back up to 112. But that's building cause to, bottom line, break the swing point of December 16th, which is that 106 area, and then run on down to the 95 area. We put this on a monthly basis, and on a monthly basis what you're going to see is that once you get back inside 100.72, that could present some real problems for Apple. Apple has been hanging up here with dramatically lighter volume, meaning over that 109 area. You know, we'll see how it comes off those highs. Amazon. Amazon, of course, is great for the consumer. If you haven't got Amazon Prime yet, get it and use it, folks. It's amazing. But for the stockholder, no. We're at 309. Amazon's running to 284. I expect it's going to be a lot lower than that. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials are up 30. Nasdaq's down 5.5. S&Ps are up $1.50. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials are up 41 right now. NASDAQ is down $1.50. You get the S&Ps up 3. And there's a couple stories out here that, I suspect coming into 2015 we're going to be looking at. The first one here, and, as to researchers, you always want to know who's paying for the research, folks. And I don't know who's paying for this one, but this is something that I'm going to hunt this week. So this just come across the tape. Cancer. So the headline of this is cancer likely due to biological bad luck rather than behavior. This is the article. Cancer in most cases may result in biological bad luck rather than caused by genes or behavior, with random division of stem cells making people more vulnerable to mutations, a new study shows. A formula that plotted the number of stem cell divisions over the lifetime against the risk of cancer showed a correlation and explained 2/3 of the cases, according to a research paper published this week in the Journal of Science. The study, conducted by mathematician Christian Tomasela and geneticist Bert Vogelstein of Johns Hopkins University, is based on previously published cancer statistics. Now, Johns Hopkins, folks, is a great university, no doubt. It's a great medical system. Bottom line, we still want to know who paid for this, because watch how this shakes out. The research may bolster arguments that cancer often can't be prevented, with risky behavior such as smoking and excessive exposure to sun being less of a cause than chance. That would support focusing more resources on diagnosing the disease in early stages and treatments to reduce mortality rates. The researchers cautioned that the study isn't a license to engage in unhealthy behavior. Cancer-free longevity in people exposed to cancer-causing agents such as tobacco is often attributed to their good genes, but the truth is that most of them simply had good luck. That, folks, I don't believe. That's why I want to know, and we'll find out and hunt this a little as to, because specifically what they're saying is that smoking won't kill you. And get me, that's like, we've seen too many of these studies in the past that the large tobacco companies have paid for them. So they're supposed, well, they are making a case that this is a biological bad luck. That's insane. That is just a mind blower. Now, this one here, that's a serious one. This one is more of a fun one. And this story, okay, has to do, I got to find this thing. It's, I think it's White Tower. I forgot the name of this. I think it's White Tower. It's a hamburger place, and I remember this when I was a kid because I used to love these hamburgers. Anyway, well, thank you. It's White Castle. Okay, so check this out. White Castle, and White Castle folks, okay, yeah, they get greasy hamburgers, but I used to love them. That's the bottom line. Anyway, down, they are coming up, and they're going to do veggie burgers, right? Let me tell you something, folks. That when you go to a White Castle, the last thing that you're ever going to go get is a veggie burger. It just doesn't happen. It's not even close, okay? And I can tell you, so check this out. This is pretty wild. And I can tell you, even in the context of, there's certain environments that I think, well, I can say from my own experience, there's certain environments that I'm in that even when, I eat pretty good. Was it White Tower? White Castle. White Castle, okay. And so, in this context about eating good and not eating good, most of the time I eat pretty good. But check this out. So when we go to the Lightning game, okay, and my son and I, we're big hockey fans, okay, so we're always there. And what ends up happening is that they have this whole feast thing going. And inside this feast thing, well, you can turn around and have, you know, some good shuckers, shrimp and all this stuff, right? But for some reason at a hockey game, I can't eat that. That just doesn't go with me with hockey, okay? And it cracks me up because other than that, you know, I like that type of food. Bottom line, what do I eat? Nico's going to kill me? Oh, guess what I eat? I eat pizza. I eat pizza and beer. That's the bottom line, okay? So to go back to White Castle, I just can't. They have to find a whole new bunch of customers to eat veggie burgers. Because if you've ever had a veggie burger, I've had a few that I guess are all right, but they're you know, they're nothing like a good sleazy, greasy cheeseburger from White Castle. Yeah, no doubt about it. Anyway, 2015, folks, we're going to have some fun. No two ways about that. Market-wise, okay, this is going to be the year, once again, that we're going to have rates that, you know, I don't know what's going to drive. Well, it's going to be supply and demand that drive these rates so low. But guess what? If you're thinking of buying a house out there, refinancing a house out there, all of the above, well, start right now, because the way we're at 2.1 on the 10-year. That's saying on a 10-year right now, you can get a 3.9, 3.95. If this does an ABC structure like I think it's going to do, I suspect in another month and a half, 2 months, you are going to be at about a 3.7. And, you know, you don't need the top of that market, folks. What you need is that you need something that you can afford. And, you know, depending, you know, if you're buying your first house, second house, third house, what you do have out there is that the FHA loans, the VA loans, they're wide open, folks. That, you know, if you listen to the amount of folks saying that everything's too tight, it's not too tight. You know, I've sold quite a few properties in the last 4 or 5 months. And the bottom line, those FHA, those VAs, they're fast, they go through fast, and they're low down payments. Okay, so if you're looking for your first house, go start hunting right now. And you know, there's no doubt that the house itself has to appraise out. That is a big deal. But you just have to find something that is right for you, because what you do have, when you do the correlation, you know, I remember at the highs of the market in the real estate, how many calls we used to get. And we were going through the correlation about what the rent structure is, what the place is worth. The whacked out part right now, folks, is that you can buy many places, depending where you are, and your cash flow is dramatically bigger than what the cost is to buy. You know, and we'll see how much longer that lasts on a continual basis. But there's many cities that work like that, and that's where, no matter what happens with the real estate, if you are in a positive cash flow, after paying the taxes, paying the water bill, guess what? You're in great shape, folks. That's the bottom line. So this, you know, you're going to see the rates are going to go, I suspect, dramatically lower, not smaller. Because the way the bond is moving right now and the way the dollar is moving, it's like, man, this is absolutely wild. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it, folks. Everything you need is right inside you. Grab it. Have a blast with it. We look forward to a great 2015. Have a great weekend, safe weekend. Look forward to speaking it right back here Monday. Go get them, folks.